Laura, how would you define impact investing in the framework of the creative economy? And what actually makes it different from impact investing in other sectors?
So the definition of impact investing, I don't think changes when you bring this tool and this type of capital to the context of the creative economy. The definition of impact investing is investing, proper investing. It's not philanthropy, it's not grants or gifts or donations. These are investments. They can be equity, they can be debt, but they are seeking a financial return. They are also seeking, in addition to a financial return, some sort of positive impact, whether it's environmental or social. And I think it's very important as we bring forward this conversation about impact investing in the creative economy that we follow the rules, that we stick to the definition of impact investing that the impact investors have been familiar with and building towards over the past 25 years. What's different is us scoping the creative economy in a way that will make sense to impact investors. When I started Upstart Collab and I began to talk about impact investing in the creative economy, I would get a whole range of questions. Why is buying a Picasso painting an impact investment was one question. And I said, I don't think it is. How can you invest in a ballerina? And I said, I don't think you can. But what you can do is think about investing in businesses that are in industries like fashion and film and TV and video games and food. And impact investors know how to invest in businesses, and they can bring the same criteria and the same aspirations to those types of investments. So while I think the definition of impact investing remains the same when you bring it into the context of a conversation about the creative economy, I think it's very important when you bring the creative economy as a new theme or a topic to impact investors, you do it in terms that they can understand. Not investing in creativity as a mindset or creativity as a skill set, but creativity through industries and the businesses that make up those industries.
What kind of investors have you managed to mobilize, and what is the also financial return that those investors are seeking?
Great. So just a little context on Upstart Collab. We are ourselves an NGO, and our goal is to build the ecosystem for impact investing in the creative economy throughout the United States. We approach this in three ways: making the case through research and conversation and convenings for this opportunity of what the creative economy can offer to impact investors and what impact investors can offer to the creative economy. The second thing we do is we build the coalition of impact investors who are enthusiastic about art and design and culture and heritage and creativity. Similarly, we try to unlock the capital that sits within the endowments of the museums, cultural institutions, libraries, art schools in the United States, which by our count is about $64 billion, and very little of that is currently aligned with the values of these institutions. And the third thing we seek to do is bring investable products to market and mobilize impact investment capital for the creative economy. So the good news is, you mentioned we had mobilized $23 million to our mission. We are now launching our new chapter, and to date we've mobilized $45 million to our mission, so we're very excited about that. And when you asked about what are the type of investors that we bring to the conversation, really they fall into two categories. There certainly are artists, arts institutions, foundations that fund in the arts, who are now joining the conversation about impact investing because of the opportunity to align with something where they're passionate and where they have strategic expertise or a clear relationship. A museum investing in the creative economy makes a lot of sense. But similarly, we're trying to showcase the opportunity that the creative economy offers to all impact investors. If you're an investor and you're seeking the highest and best use of your capital, why would you overlook the 5 to 10% of the American economy when you're seeking the best opportunities to make money and do good. And that's what's happening now. Impact investors have not been paying attention to the creative economy and to creative industries in the way that we think that they should. So we're very excited that among the foundations that have committed to invest in our new inclusive creative economy strategy, which is the first national impact investing vehicle for the American creative economy, while we have investors like the Ford Foundation and the Andy Warhol Foundation who actively work in the arts, we also have two foundations that have no interest, no connection to art and culture, but they are persuaded by our impact thesis, and they want to achieve those same impact goals, and they don't want to miss out on the best opportunities in the creative economy when they're trying to achieve those goals. So the impact that we bring to our investors fits along 5 categories. 3 of them are relevant to pretty much every impact investor. Access to capital for women and minorities, opportunities for quality jobs, work that is both meaningful and well compensated, and the opportunity to anchor vibrant communities around creative places and businesses. So those are 3 topics: financial inclusion, workforce, and community development that many impact investors care about. We have 2 impact goals that are very relevant to our focus on creativity. One is sustainable lives and livelihoods for artists, designers, and other creative people. And the second is what we call an inclusive creative economy that respects traditional wisdom and innovation, values diversity and inclusion, and takes an open and experimental approach.
Do I understand correctly that you actually mobilize equity investors? Are those equity investors?
So our strategy will be making equity investments both directly into seed and early stage companies, and also by investing in funds that are led by women and people of color, where we have seen through our research a very strong correlation where funds that are led by diverse fund managers are frequently well exposed to businesses in creative industries, because we've seen that diverse entrepreneurs are succeeding in the creative industries in the United States. So the funds are focused on investing in women and people of color who are entrepreneurs. The fund managers are not primarily focused on the creative economy. They may not even know that term, but we help to bring that correlation into visibility and activate those fund managers as colleagues and champions for the creative economy.
And what are the main investment criteria that they are assessing before committing their funds?
So when investors talk to us, they talk to us first and foremost as investors and impact investors. They want to understand our investment thesis and why we believe we can make money. They assess my team and our investment committee to be sure that we're properly qualified to do this work. They want to understand what's in our investment pipeline and the criteria that we use for sourcing, screening, and qualifying investment opportunities. They want to understand the impact thesis as I just described it and see that it aligns with their impact goals as well. So they're approaching this as they would approach any other investment opportunity. I will say that there are some particular concerns to be sure that artists and designers and creative people are properly benefiting, and that this is not money that will be made off the backs of the creative people. So we do get some questions along those lines. The investors that come to us for this opportunity see it as an important demonstration of what's possible. We're behind the UK. We didn't have a Fran Sanderson who was getting this started earlier and was able to quickly get capital to work. So we're trying to catch up with what's happening in the UK. And the influence strategy that Upstart brings to this conversation, where we're demonstrating what's possible, we will be radically generous sharing the lessons that we learn. Our goal is to motivate wealth advisors to direct their clients' capital to the creative industries, and fund managers to prioritize business investment opportunities in the creative industries. So the types of investors who are attracted to this work see it as an important demonstration to de-risk and decipher the creative economy so that more impact investor dollars will come to this space.
Wow. How can we replicate these models in Europe or elsewhere?
So it does require a champion, an individual or a small organization who can work in a cross-sector fashion and engage government where that's the appropriate partner, that is able to knowledgeably talk to investors. You can't just have an aspiration around impact and a love of arts and culture and creativity. If you're bringing forward an investment proposition, you actually need to have investment expertise, training, track record. At least some portion of the team that's bringing this forward needs to be legitimately viewed as a qualified investment professional and expert. And I do think it's important to, as I said, follow that three-part recipe of making the case through data, research, pilots, and demonstrations, building as broad of a coalition as possible that will welcome both existing impact investors, existing art lovers into the conversation and be ready to convert to a commitment to the creative economy, impact investors that are not that interested in culture and creativity, but want to find the best investable opportunities to make money and do good, as well as strategically aligned artists, art collectors, arts organizations who can bring that strategic expertise and hopefully some capital and passion to the equation. And then lastly, having the conversations, it's an important starting point, but it's insufficient. You've got to make mobilizing capital the focus of the work. This is not just an advocacy exercise. And so whether that's leveraging existing instruments and working with existing investment partners, as we did early on, cooperating with we were 2 years old, but we were cooperating with an organization that was 30 years old, had a national reach, and was AA rated. So we worked with this partner organization, and they used their existing note product to raise capital for investors and direct that to affordable housing for artists and affordable shared workspaces for creative economy businesses. And that proved to be an important pilot to show that if you built the right investment instrument, art-loving impact investors and other impact investors would come. So that was an important demonstration, but we knew that we couldn't stop there, that we needed to have something that was fully dedicated and within the control of the Upstart team as the ultimate vehicle that we're trying to build.
What is next for arts and culture finance?
Well, I can tell you what's next for us in the United States. Last week, we had the first close on our national inclusive creative economy strategy. We have $15 million committed to this approach, which we're very excited about. It's only the first close, so we have to continue to wear out our shoe leather, raising money between now and December of 2024. So that's certainly on the agenda. Our investment committee has already approved the first 2 investments that we'll make, and I was looking at all the busy things my staff has been doing while I've been out of the country for the last week, and it looks like we've signed the investment documents on the first investment, so the money has come to us, and immediately we're putting it out into the creative economy, which is very exciting. We will continue to source and screen and diligence additional investments to absorb the dedicated capital to this strategy. We are convening for the first time in June an advisory group of artists and impact investors who will be a touchstone to the Upstart team to ensure that we are keeping the goals and the needs of artists top of mind as we identify and select the investments that we'll be making. And as I said before, we will be radically generous sharing what we learned throughout this process. So we are already thinking about the impact report and what we will include to share our insights and learnings a year from now. So colleagues have already mentioned bureaucracy and red tape go hand in hand with creating new regulations and standards. And frankly, I'm too impatient to work through that system. So the provocation that I would offer is to say, how can we understand and fully utilize the regulations and standards and similar tools that are already in place and adapt them, focus them on our goals for the creative and cultural industries. And I'll give you 2 examples of how my organization has tried to do this in the United States. Within the banking sector, there's something called the Community Reinvestment Act. This was put in place back in the 1970s to counterbalance some very bad banking practices that had discriminated against low-income communities. So if people were seeking a mortgage for their home or loans for their businesses, and their businesses were geographically in these poor communities, the banks would just discriminate against them, and the money would not be made available. And the federal government decided this was wrong and has set up a series of regulators who oversee banks and oversee insurance companies. And so these large financial institutions have requirements that they are forced to meet. It's a criteria for their ongoing certifications and being able to continue to function as banks and insurance companies. They have to fulfill obligations under the Community Reinvestment Act to make loans and philanthropy and some other types of services available in these low-income communities. So this is a very big system, and a lot of banks and community banks are touched by this regulation. My organization worked on a white paper, which we did all of the work, but we were lucky enough to co-publish it with the Federal Reserve Bank of San Francisco. The Federal Reserve Bank is one of the regulators for this Community Reinvestment Act. So it's very powerful to co-publish this guidance document with one of the regulatory organizations. And what we did was look back over the past 15 years. We identified 25 or 30 specific examples where, within the context of the Community Reinvestment Act, money was made available to creative businesses and creative places in these low-income communities. We use these examples to demonstrate that if you, as the financial institution, made your money available to these creative and cultural projects, your regulator would not go, no, 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 and disapprove, right, reject this project, because the financial institutions have no incentive in antagonizing their regulator, right? They just want to fulfill this requirement, get it done, and move on. We were able to demonstrate it was absolutely possible, legitimate, within the scope of the act, and that here are 25, 30 examples of how others have done this before you. Very powerful. And so that did not require new regulation, just fully utilizing the existing policy and regulation and demonstrating that others had done it and how you can do it too. The second example, under the President Obama administration, there was something that was approved called the Jobs Act. And one of the elements of the Jobs Act was to allow individuals who are not qualified investors, so have a lower amount of money, a lower amount of investment acumen, allow individuals to make direct investments into young companies, loans and equity investments. And what this did was open up the whole field of crowdfunding to move beyond philanthropy or going on Kickstarter and providing capital to some great project you're interested in. And it allowed individuals for $50, $100, very small increments of money, to be able to make capital available to small businesses through these crowdfunding platforms, which will bring together the money, and so that the company can be raising a meaningful amount of loan capital or equity capital. We identified that a relatively newer entry to this crowdfunding space, a crowdfunding platform called Honeycomb Credit, with their focus on mom and pop brick and mortar businesses that you walk to in your community, not businesses that live exclusively online, but actual businesses you can know and visit, that the focus on these everyday businesses that were raising capital through the Honeycomb Credit platform, 90% of these businesses were in creative industries. They were bakeries, they were breweries, they were florist shops, they were beauty salons, businesses that were in the creative industries. So my organization partnered with Honeycomb Credit to call attention to the presence of these businesses and creative industries on their platform, and to develop a wholesaling model so that large foundations who wanted to make capital available to businesses in the creative industries could put large amounts of money onto the platform, which then would be distributed in small checks to these individual businesses as they had campaigns to raise loans or raise equity capital. Again, we did not need to create a new regulation. We did not even need to create a dedicated platform to allow people to invest in creative economy businesses. We just needed to identify a platform where this was already happening and amplify it. So I suggest, if you're impatient like I am and don't have the capacity to wait slowly and move through the red tape and through the bureaucracy, new regulations and standards, you can take a more guerrilla approach and look to see how to fully apply and utilize existing regulations and existing responses for the creative economy.
Thank you.